Hey everyone, welcome back to Corporate Decoder. Today we're diving headfirst into Greenpro Capital Corp's latest quarterly report, and let's just say they've got some interesting numbers that might make you scratch your head or maybe even raise an eyebrow. Stick around as we decode what this filing really means for the company's future. And hey, before we jump into the nitty-gritty, if you love getting these complex financial reports broken down into plain English, make sure you hit that subscribe button. And if you want to chat about these filings even more, join our awesome Discord community, link below in the description. So, Greenpro Capital Corp, they're in the business of cross-border business solutions, digital assets, and real estate. It sounds like a diverse portfolio, but let's see how that diversity is playing out. Let's start by looking at their financial health. As of the 30th of September 2025, their total assets stand at about $6.1 million, down from roughly $6.5 million at the end of 2024. That is a slight dip, and it is always interesting to see where that change is coming from. Their current assets, meaning things they can easily turn into cash, are around $2.5 million for 2025, down from nearly $2.9 million in 2024. Cash and cash equivalents specifically have dropped from over $1.1 million to about $775,000. That is a noticeable decrease in readily available cash. Now, something that pops out is their due from related parties, which sits at almost $1 million. That is a huge chunk of their current assets. We'll dig much deeper into these related party dealings later, but it is worth noting how much money is tied up with companies connected to Greenpro. On the flip side, their liabilities are also worth a look. Accounts payable and accrued liabilities are sitting at about $935,000 as of September 2025, slightly down from $975,000 in 2024. And then there is stockholders' equity. It has decreased from about $5.2 million at the end of 2024 to around $4.3 million by September 2025. This decrease is largely driven by their accumulated deficit, which shows the company has a history of losses. It stands at a hefty $38.9 million. Up from $37.2 million at the end of 2024. This means more red ink for the period. Now, let's get to the juicy part, the actual performance. Their total revenue took a hit, going from about $540,000 in the third quarter of 2024 to $393,000 in the same period in 2025. That is a drop of over $146,000, or about 27%. The main driver of this decline appears to be their service revenue, which dropped from over $521,000 in 2024 to $377,000 in 2025. This is their core business, so a 27% drop here is significant. They mention fewer advisory services were rendered, which is a straightforward explanation but highlights a key area of weakness. Interestingly, they started generating some digital revenue in 2025, about $44,000 for the 9 months. This is new territory, and while it is small compared to their service revenue, it is a growth area. Rental revenue had a small dip from $539,000 to $393,000 in the third quarter. For the 9 months, it is also down. This part of the business seems stable, but not a major growth engine. This revenue drop directly impacted their gross profit. For the third quarter, gross profit fell from about $395,000 in 2024 to $264,000 in 2025. That is nearly a 33% decrease. Their general and administrative expenses, or GJI, while decreasing slightly from $868,000 to $784,000 for the quarter, remain a huge cost. For the 9 months, GJI is over $2.6 million. It is good. They're seeing some cost control here, but it is still a massive outgoing. All this translates directly to their operations loss. They reported a loss from operations of $520,000 for the third quarter of 2025, compared to a loss of about $473,000 in 2024. The loss widened, meaning they're losing more money on their core business activities. For the 9 months, the loss from operations is $1.8 million. Up from $1.5 million for the same period in 2024. This widening loss is a red flag. What is propping up their other income section is their investments. In the third quarter of 2024, they had a nice gain on disposal of investments of $127,000. This year, that was absent, which means their other income section is much smaller. This points to a reliance on asset sales to boost their financial performance, which is not a sustainable business model. Unsurprisingly, their net loss increased. For the third quarter, it went from $330,000 in 2024 to $513,000 in 2025. That is a 55% jump in net loss. For the 9 months, their net loss is $1.7 million, up from $1.1 million in 2024. They are losing more money, and that is never a good sign. Now, let's talk about their digital assets. As of September 2025, they hold about $236,000 worth of various cryptocurrencies like Bitcoin, Ethereum, and Tether. This is up from $192,000 at the end of 2024. They also recognized a fair value gain of $1,426 in the third quarter of 2025, which is nice, but then a loss of $3,444 for the 9 months. This segment is still very new and volatile. They've also got a portfolio of other investments totaling about $12,000. What is interesting here is that most of these are fully impaired, meaning they've lost most or all of their value. This is a concern, as it shows poor investment choices or market conditions hitting these smaller stakes hard. One positive sign is their deferred revenue, which has actually grown significantly. It is up from $213,000 at the end of 2024 to over $683,000 by September 2025. This means customers have paid them in advance for services not yet rendered. This is usually a good indicator of future revenue, but it is crucial to see if they can actually deliver on those services to earn that revenue. Looking at related party transactions is always a must, and Greenpro has a lot going on here. As of September 2025, they are owed nearly $1 million from related parties. This includes over $800,000 from something called Related Party D. At the same time, they owe about $118,000 to related parties. This shows a lot of intercompany financial movement. It is hard to judge without knowing the specifics of these related parties, but these large balances warrant careful monitoring. Their service revenue from related parties has also dropped dramatically from $347,000 in the first 9 months of 2024 to just under $46,000 in the same period of 2025. This significant decrease in revenue from their connected companies could be a sign of a strategic shift or a sign of trouble in those relationships. Conversely, their revenue from external customers has remained relatively stable, even seeing a slight increase for the 9 months. This is a good sign, as it suggests their core business is holding its own with outside clients, despite the overall dip in revenue. Now, onto the risks. Greenpro faces a mountain of them, especially with their digital asset business. They are heavily exposed to volatile digital asset markets evolving and often conflicting regulations globally, and a heavy reliance on a few key liquidity providers and partners. Cybersecurity is also a huge concern. They mention their systems and those of their vendors are vulnerable to attacks, data breaches, and operational errors that could compromise customer assets. Given the nature of digital assets, the security of these systems is paramount. The regulatory landscape for digital assets is a minefield. They highlight that global authorities are still figuring out how to classify digital assets, and that inconsistent interpretations could lead to registration, licensing, or enforcement risks. This uncertainty is a constant threat to their digital business. And of course, the prices of digital assets fluctuate wildly. They explicitly state that sustained downturns can slash trading volumes and fee revenue on their platform. They even cite the example of Bitcoin's price swings from $16,000 to over $100,000. This volatility directly impacts their bottom line. They also carry limited insurance, which might not cover all potential losses from breaches or cyber attacks. This leaves them exposed to significant financial hits if something goes wrong, and the cost of maintaining insurance could rise. There is also a significant legal battle brewing. Millennium Fine Art Inc. is suing Greenpro for around $66 million, alleging breach of contract related to non-fungible tokens or NFTs. While Greenpro is fighting this, an adverse outcome could be very damaging. Looking at their balance sheet, they have goodwill of $6.035 million. This represents the premium paid over the fair value of acquired assets in past business deals. It is a substantial amount, and if any of those acquisitions underperform, this goodwill could be subject to impairment, meaning a write-down of its value. So, what is the big picture here? Greenpro Capital Corp is navigating a challenging environment. Their core service business is seeing a revenue decline. Their operational losses are widening, and they have significant exposure to the volatile digital asset market with its associated regulatory and security risks. While they've seen an increase in deferred revenue suggesting future income, the overall financial trend and increasing net loss are concerning. The heavy reliance on related party transactions and the significant ongoing legal dispute also add layers of complexity and risk. Their future direction seems to be leaning into digital assets, but the rapid evolution and regulatory uncertainty in that space are major hurdles. They are showing some growth in external customer revenue, which is positive, but it is overshadowed by the drops in their core business and the increasing losses. For investors, the key questions remain. Can they turn around the decline in their core services? Can they successfully grow and manage their digital asset business amidst global regulatory flux and market volatility? And can they resolve their legal challenges and manage their related party dealings without further negative consequences? The high accumulated deficit and the auditor's statement about their ability to continue as a going concern due to losses and cash burn highlight the precariousness of their financial position. That is our decoder ring analysis for Greenpro Capital Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into corporate filings. And don't forget to join our Discord community, linked in the description for more great discussions. Thanks for watching, and we'll see you next time.